How's everybody doing? Welcome back to another episode of the Banker Next Door. I am your host, Dr. Joe Berquist. So this is the 2024 mid-year review of the bank M&A market. I just wanted to bring everybody up to speed, like, okay, what's happening in the bank M&A so far through the first 6 months of the year. And I'm going to bring in a couple of articles here for us to take a look at. So if you recall, going back to some of the M&A episodes that I did earlier in the year, basically the prognosis was, hey, we're going to have all these rate cuts. And the investment banking community was really looking for basically a big uptick in M&A transactions going throughout the banking world. We have not seen that materialize as of yet. That's basically the message coming in through here. So first thing I just wanted to show everybody real quick. So this was just an article on called May Brought Slowdown in Large M&A Deal Announcements. So this is just real quick. This is just kind of the larger kind of global M&A outlook. So basically, announcements of large M&A transactions slowed in May after a quick start to the year. ConocoPhillips' $22.53 billion deal to acquire Marathon Oil Corp was the only global M&A transaction of $10 billion or larger announced in May. That ended a streak of 5 straight months in which at least 2 $10 billion plus M&A transactions were announced. Still, with 14 such deals announced through the first 5 months of 2024, the year is on pace to record the highest number of 10 billion plus deals since there were 37 deals in 2021. So while that may be true, obviously the number of deals here through the first couple quarters of the year, not so hot. I mean, it kind of, like I said, the year started off with a pop with 10 deals, and now we got 4 down here. Deal value, definitely down. So we kind of saw a pop in the fourth quarter and the third quarter, and now it's kind of leveling off there. So that's, again, just to give you guys a kind of the global outlook. Okay, so now let's get into the banking outlook. So here's Bank M&A 2024 Deal Tracker. Volume remains muted as deal value surges. So the targets are getting larger, but banks seemingly remain hesitant to join the M&A dance party. As of June 14th, 27 bank deals worth an aggregate deal value of $5.45 billion were announced in the quarter to date, surpassing the $5.2 billion combined deal value of the 126 bank deals announced over the preceding 5 quarters. This year's deal volume is so far on pace to surpass 2023's 99 deal announcements, but barring a second half surge, the 2024 annual total is likely to come up notably short of 2022's 156 deal announcements. So we could see here 54 U.S. bank deals announced in 2024. But we could see here the last couple years, 2020, 21, 22, 23, 24. We could see here, what is this? Kind of like value and bill. So total deal value, we've got bars, and then we got number of deals here. So, I mean, we could definitely see that since 2021, the number of deals has really been coming down. The total deal value dramatically down over the last 2.5 years compared to what we saw in 2020. I mean, obviously, 2020 pandemic year, kind of have to back that out of the equation. But, definitely 2021 saw a huge pickup. But last couple of years here, last 2.5 years has been very muted. The median deal value to tangible common equity ratio for bank deals announced quarter to date through June 14th was 132.2%, the highest mark since the first quarter of 2023. And then here's a great little chart. This is the chart that I like to look at. So you can see here total number of deals. So in 2020, we had 112 deals. In 2021, we had 202 deals. In 2022, we had 156. And last year, we only had 99 deals, which I think was probably one of the lowest totals in quite a number of years. Up before 2020, from probably 2010 through 2019, over that 10-year period of time, we were probably averaging about 250 transactions a year. So you were probably consolidating about 1,000 banks every 4 years at basically at that pace over that 10-year period of time. And then obviously 2020 hit, dramatically slowed things down. We started to get back to what we, like I said, what we kind of saw in the preceding 10 years in 2021, but then it's really come down. So we're looking like we're on pace at 54 deals through the halfway point of the year. Deal value is up. Assets sold are up. Deposits sold are up. But the median deal value to tangible common equity is still below where it was a couple of years ago. Obviously, way below what it was in 2021 and 2022. So people are not getting great book value when they're on selling their banks right now. And then again, you can see a nice chart here, kind of assets sold, deposits sold. And let's just see here, a couple of deals in 2 weeks. Bank M&A activity is at a 6-year high in Washington this year, thanks almost entirely to credit union buyers. Credit unions were among 4 of the state's 5 acquirers in 2022 and have accounted for 6 of the last 10 bank M&A deals announced in the state. It's kind of interesting. And then most expensive U.S. bank deals announced in 2023. The number 1 deal was Atlantic Union Bankshares Corp. Buying American National Bankshares in Danville, Virginia. And then let's see here. Bank deals by region. We got a little chart here by regional. You can see a little bit more activity on the East Coast and kind of central part of the country as opposed to the West Coast. All right, and then I wanted to share with everybody. So while M&A has basically been muted for the most part the last couple of years and this year, there is Georgia. This was very interesting, the Georgia market. So Georgia bank M&A off to the fast start in 6 years. So bank M&A in Georgia is off to its hottest start in 6 years as attractive demographics, stellar bank performance, and many small banks draw in and out of state and credit union buyers. So Atlanta Postal Credit Union's announced acquisition of Affinity Bank marks the 4th deal targeting a Georgia-based bank so far this year, already surpassing the 3 deals seen in full year 2023 and marking the first time the state has seen so many deal announcements in the first half of the year since 2018, according to S&P Global Market Intelligence, with attractive growth demographics and many small but financially strong bank targets. The state is attractive to out-of-state and credit union buyers alike, industry experts said. So some recent bank deals announced in Georgia. We had Atlantic Postal Credit Union buying Affinity Bank, United Bankshares buying Piedmont Bank Corp., Lowndes Bankshares buying FMB Bankshares, Southern States Bankshares buying CBB Bancorp, Five Star Credit Union bought Wilcox County State Bank, and then they also bought One South Bank. Private investors purchased Southern Bankshares, and then LGE Community Credit Union bought Greater Community Bank. GDW Bankshares bought GOD Worthen Bank. Kind of interesting. And the First Bank shares bought Heritage Southern Bank Corp. Okay, now we're getting back into 2022. Of the 4 buyers in Georgia bank deals announcements this year, 2 are headquartered out of state. Similarly, 10 of the state's 20 most recent deals involved out-of-state buyers. So in addition to out-of-state buyers, credit unions are making up a larger share of M&A in the state. In the last 12 months, a credit union was the buyer in 3 of 7 deals, which I just pointed out, compared to 3 out of 14 deals between 2021 and 2022. Part of the reason for the interest in the Peach State is attractive growth demographics. The state's population is expected to grow by 3.67% between 2024 and 2029, above the 2.4% projection for the U.S. as a whole. Georgia has been in a pretty strong growth mode neighborhood. So if you're a bank, this is where you want to be, said Lee Bradley, Senior Managing Director at Community Capital Advisors, who advises on bank deals in the Southeast. A lot of these out-of-state banks want to get in on the action. Georgia community banks also largely outperform their peers across the country. Georgia-based banks with less than $10 billion in assets in the first quarter reported a median 15.31% return on average equity, a median 4.22% net interest margin, and a median efficiency ratio of 61.32% for the 12 months ended March 31st, compared to 10.28%, 3.37%, and 67.26% respectively for all U.S. community banks. They also reported higher year-over-year growth for both loans and deposits than their U.S. peers. So yes, I would agree with that assessment. I was going to say that the average return on average equity, the net interest margin, and the efficiency ratio are all really good numbers, very good numbers for the industry. And as he says here, it's just been a good growth market for banks to go to. So, so it's very interesting. So Georgia continues to be a very hot market at the moment. So while like I said, while M&A transactions are muted for most of the country, there are pockets. Georgia, I mentioned Washington. What do we have here? M&A activity is at a 6-year high in the state of Washington. So, and I think if we go down here to the chart again, you can see there's kind of a number of deals clustered in Washington up here in the left-hand corner. And then Georgia, a number of deals down here. So, so that's kind of where we have it so far this year. So again, kind of on pace to do a little bit more in M&A this year than was done last year. But while deal value is up, the median deal value to tangible common equity is a lot lower. So we'll see. We'll have to just continue to watch this and see what happens. But yeah, so basically I would expect, like I said, unless there's some kind of surge the second half of the year, I expect bank M&A to kind of remain kind of muted. We'll see about that. I think we'll probably see about 105 transactions, something like that this year. Like I said, unless something happens in the fourth quarter, maybe the Fed makes some kind of, maybe they reduce rates a little bit more. Maybe something happens in the market. Again, there could be other economic factors that could come into play, which could it could go either way. It could pump the deal volume up a little bit by a few, maybe it gets up to 115 or 120 transactions, or we could, see a sharp decrease in the fourth quarter, and maybe we only end up with 80 transactions this year. So we'll see. But like I said, it's always important to kind of keep an eye on what's going on with bank M&A deals and kind of where things are at in the market. And this gives us a, kind of a great tail of the tape of where things are at right now. Probably not the best year to be trying to sell your bank. I would say if you can wait till next year, you kind of make sure that, there's no issues with like your bank bond portfolio, earnings are solid, credit quality is solid, all that good fun stuff. And then maybe try to position for a sale, maybe in a year or two, if you can. But there's the mid-year annual update or mid-year review for 2024 for the bank M&A market. So if you like this episode, please make sure to like, share, and subscribe. That always helps the channel. Please make sure to leave your comments down below. And remember, you can always find us on YouTube, Rumble, and all the major podcast platforms. Please check out some of the other episodes that I posted this weekend, including the weekly banking update, which is the main show of the channel. And I will see everybody again real soon. Thanks a lot.